Hello friends, I welcome you all to my YouTube channel. Today's topic will be global financial crisis. I promise you that I will leave no stone unturned for completing this course. Okay, so just be with me. So coming towards the today's topic, so I will explain you this topic in a very simple way. I have already mentioned the points into 13 parts, and all these 13 parts, if you understand properly, your topic will be cleared thoroughly. So let's start the topic. So here comes the concept of prime borrowers. Who are prime borrower? Someone who visits the bank and if his credit history is good, if he has all the possessions in which the bank can trust, those are prime borrowers. Okay, I hope you are getting the point which I am trying to convey. Second is the broker. Prime borrower goes to the broker for the house. They want a good location where they can build a house, or they want a good house to which they can finance. Broker takes the prime borrower towards the bank. Bank, upon seeing his possessions, upon seeing his credit history, lends the loan. Okay, I hope you got these 3 points. Prime borrower goes to broker, broker goes to bank. What bank does? Bank signs a mortgage with the prime borrower. What mortgage means? The bank possesses the whole right. The bank possesses the whole right to capture his property if he fails to pay the loan along with the interest. That is the basic meaning of the mortgage. These are the four terms which was there at that time. But now the gist is that the investment bank comes into the picture. So what investment bank does? It takes the mortgage. It takes the mortgage from the bank and classify them into three parts. First is the safe bonds, okay bonds, and risky bonds. All these are collectively known as collateralized debt obligation. Okay, I hope you have understood all these points and how those investment banks are taking mortgages from the bank. They are lending some money, and how they are lending those money? From the investors. So now you have to understand the sequence. Investors are paying money to the investment bank. Okay, investors are paying money to the investment bank for for all these CDOs, that is the collateralized debt obligation. In CDOs we have three bonds. I have classified those. First is the safe, second is the okay, and third is the risky. And how we have classified all these three bonds? Safe bonds are those the people who are investing money, who are paying their EMIs on regular basis. Okay, those are safe bonds. And risky are those people whose credit history is not good. Sometimes they are skipping their EMIs and sometimes they are paying. So those are risky bonds. And the returns which the investors are getting, they are high for the risky bonds and they are less for the safe bonds because less risk is involved in safe bonds. Okay, here comes the concept of credit default swap. In this, the bonds which I have classified above were provided with the insurance. After getting the insurance on these bonds, investors become quite happy because now their investments become secured because some sort of insurance is always there with them. If something happens, the insurance company will give them all the money back. So this was the basic gist of credit default swap. After credit default swap, the demand for the bonds increased. So in this way, the investment bankings were quite happy that they are getting more and more investments. Investors were also happy that they are getting good returns and they are getting secured investments. And the banks were also happy that investment banks are paying the money to them. But what happened? Now the demand of bonds increased. So banks thought that they have to provide more and more loans to the borrowers. So what they did? They explored the concept of subprime lenders. Who are subprime lenders? Who don't have the possessions, whose credit history is bad. Now the bank started giving them loans so that they can give more and more mortgages to the investment banks. What they exactly thought, what banks exactly thought, if any lender fail to give the loan, they can definitely possess their house and they can sell those. So they thought that the demand of house won't be decreasing. But different thing happened. Now, the subprime loan lenders stopped paying their loans. So what exactly happened? Banks started taking their houses. Now, the supply of houses increased. As a result, demand faltered. The prime lenders who were paying their loans regularly, they also stopped paying their loans. Why? Because due to increase in supply of houses, the price of houses also became less. So the value of 40 lakhs house came down to 20 lakhs. So the prime loan holders also stopped. Why? Because they have already paid those amount before. As a result, there were more and more houses available for sale, but the demand was very, very less. The whole system which I am talking about failed drastically. All the bank collapsed, investment banks collapsed, the investors started taking off their money. Guys, I request you to please like, share, and subscribe to my channel and press the bell icon for the latest updates. Thank you and have a nice day.